The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 17th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 12 points at 18,879. S&P's up about 9.5 at 2186. NASDAQ Composite up 35. She's trading at 53.29. Russell 2000 up 8.5 points, trading at 13.10. Gold is back $6. Silver's down 16 pennies out here. Priceline leading the charge here to the upside up $24, about 1 6/10%. AutoZone in the zone today up 1 6/10% as well. That's $12. Children's Place Inc. up 13%. Nearly 12. Intuitive Surgical up 11. Amazon up 9. Lending Tree up 9. Tesaro up $7. To the downside, well, I think it was reverse splits or something, so we won't talk about dry ships, but Regeneron Pharmaceuticals off $11. We won't talk about Diana Container Corp. Spectrum Brand down $6. Arch Coal down 6. J.M. Smuckers is doing the strawberry jelly today, down $4.76. Okay, so earlier in the about a half an hour ago, 15 minutes ago, 20 minutes ago, I posted a chart inside the den, and we're going to go ahead and take a look at it. Now, you'll see this is not the chart that I posted, by the way. We're looking at the VIX index. And earlier, while the market was up, the VIX index actually was trading a bit higher. It had the formation of a hammer candle. Right now, it's not. Right now, it's a little bit of a doji candle out here. But watch where the VIX, how the candle session closes. Now, the reason is when you get down towards Stevie's black lines out here, what you will see is, and if you get a bottoming candle, okay, a bullish reversal candle, it is a sign of higher, usually a sign of higher VIX prices out there. It doesn't work all the time, but it does work enough to pay attention. Where that hammer candle is in location to Stevie's black line is all important. So watch that. Now I'll switch back over. We're going to go back and forth here because in essence, this was the chart that I had posted. And if you take a look at this, it's a 30-minute chart now for the SPYs, because each of you can do the same thing. So I'm not showing you anything that's magical, that's special about my system out here. This is something that you can do as well. And what we can see here on a 30-minute basis, what we have seen, these are line charts. That means we're looking at closing prices. We've actually seen the makings of a top in the S&P or the SPYs and a bottom inside of the VIX index. Both those two things seeing a diverging pattern. What do I mean? SPY has been on a 30-minute basis making higher highs. So too has the VIX. Now, we don't see that this often where we are down towards the bottom of this range that I'm referring to, where markets tend to form tops. Now, it doesn't have to happen immediately. This pattern may not play out. Maybe the VIX just simply trades lower the rest of the day. The market does the zoom, zoom, zoom to the upside. So this is something that you're going to need to monitor, watch. But what we're taking a look at here is the type of pricing behavior associated with, when I'm talking about tops here, I'm referring to a short-term top. There is nothing that has changed in the prognosis with this market moving higher. When we get to a month from now, it's the 16th. When we get to a month from now, the markets are going to be higher than where they're at now. However, there needs to be a pullback, a retracement. Then in the S&P, it may just be in that 2140-ish type area, but we have to take that one day at a time. Now, I have on this chart here, just simply the 30-minute chart, some of these other type of diverging patterns out here. The most recent one that formed this little bottom back here back on November 4th, we saw again on this 30-minute, we saw a declining tops pattern. And we basically saw a double bottom, meaning a test of a previous swing low in the SPY that was rejected. Right, that set the nice bottom there. You can see some other red and green diagonal, what we'll call divergent patterns out here. Take a look at the SPYs and the VIX coming back into the September 2nd level, right? September 2nd into September 8th. You remember what happened on September 9th? Yeah, of course you do. What was the VIX index doing? Wasn't making lower lows out there. Basically, it was like double, triple-ish bottom. It was just simply flatlining, while the SPYs were making, on a 30-minute chart out here, making a higher high. Now, look, folks, this is an important tool not to use. Well, you might find other uses for it. I have found it to be a good tool to use at tops and bottoms out here. Now, back to the daily chart for the VIX. So I'm giving you what I think is, what I'd like to do, the most important chart today to look at. Now, what happens if today ends the candle? Let's just say, hey, market's over. This is what we're looking at. You don't have any kind of bullish reversal signal. In fact, inside the VIX, you've actually got a little bit of a gap down out here. And that's the only thing that's a bit of a challenge, even if today is a hammer candle, is you also have a competing bearish signal, a gap to the downside out there, right? That means, when we take a look at gaps, remember, they're our friends, not our foe out here. In this case, it would be the foe, because it would just simply be, we would have two converging patterns. So you put this together, though, with what we're looking at inside of the 30-minute SPY chart, and I think it's very helpful. Now, with regard to other hammers that have formed, we don't have a hammer today. Don't know if we will or if we won't. I'm asking you to keep your eyes out on that. Yeah, if we take a look at the last one that formed back here on July 21st, of course, what we saw was the VIX VIX went ahead and moved higher, a bit higher out here. Did it for about, 10 trading sessions, 8 trading sessions out there. Again, short-term top is what it is that I am looking for out here, not a long-term top out here. If we take a look at the last hammer before that, that formed, that was on December 24th. That was a Christmas gift, right? You had a hammer that was forming at the bottom of Stevie's black line, at the bottom of that band out there, and we saw the VIX continue to move higher from that point in time. Now, I'm not showing the S&P on this chart out here, but if the VIX is moving higher, the markets are going to do only one of two things, either trade sideways or move lower. When I say the markets, I'm referring to the SPYs out here. We can find you a hammer candle that failed, I'm sure. Here's the most previous hammer candle to that. It was a double gui, meaning we had a double header. That was on March 23rd and March 25th of 2015, and of course, a sign of prices moving higher out there. So look, if you're a day trader and you see this pattern, and you're one that likes to play with nitroglycerin, you can take a look at that, what is that, UVXY, probably one of the absolute worst trading vehicles out there, other than intraday. Why do I say that? I believe between all the reverse splits, it would really, in essence, have started selling at $231,000 a share. It's like 11 or 12 bucks right now. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up about 12 right now. S&P is up 10. So we've got some requests that have come in. Let me go back here. I believe was looking for some currency pairs first. So let's go check in on those. Good afternoon, Steve. Wondering about your thoughts on these three currencies, the dollar, the yen, and the euro out here. So let's go take a look at each of those. With regard to the dollar, let's go ahead and start here. A little 10-minute delay on this chart. So, it's not going to be trading exactly where we're looking at, which is 100.86. Now, if we go take a look at it, let me go over to my other system out here, because I believe we are now where we might be in leg. I don't know where we're at. Let me just simply go ahead and put this chart up here. Too many charts going through my mind, my brain out here. So maybe that not even thinking of what I was thinking of. That's true. I'm not thinking of what I was thinking of. Okay, here's what I was thinking of. What we're going to see today, so let me put this chart over here. So what we are going to see today, depending, it's very clear to me what we're going to see today. Is it clear to you? What we're going to see today is we're going to get a TD sequential count today. Because we're going to have a higher close, or we certainly should have a higher close than the candle 4 bars ago. Now, that's a TD sequential. That's a 13 count. We also happen to have right now, as of yesterday, a TD combo 13 count. Both of those, and today what you're also going to get is a TD setup 9 count. So we've got 3 of Tom DeMark's count systems. It doesn't happen that often, where you have 3 that are forming like right at about the same time. Now, those alone are not a signal to jump on the short side of the trade. They are signals to say, if the market is going to turn, this is where it's going to turn. Now, there are a number of different tools or ways that you can utilize this to trade. So, pick your own medicine out there. Maybe go to short-term time frame charts. I'd have to say that would be the best, because the daily won't confirm until you get below Stevie's red line, which is 99.68 out there. And that would be a pretty decent drop. Now, the nice thing about these patterns as well is that when they fail, so at the 9 count, so to speak, when it fails, it tells you a lot about the momentum of the move out here. So that's the other beauty with regard to what is it that we see inside the U.S. dollar index, right? If we see that the U.S. dollar continues to move higher out here, and you have those 3 types of reversal signals that are coming together, it just tells you have a strong momentum move. Now, what does a strong momentum move inside the U.S. dollar index do? Well, then you start taking a look at probably your A to B equals CD pattern out here. That A to B equals CD says you've just made the 1-to-1. 100.945 is the number. And we know that because of the explosive move off of that C point, that's what we're using, that's that big election day C point, this would say then the U.S. dollar index would head up to 102.31. Now, that helps answer part of the question typically about what is the euro doing, right? It should be just the opposite. So if we go take a look at the euro, let's do that by just simply looking at the equity, at the futures contract for it. So we'll look at 6E. We'll do the same thing for the Japanese yen out here. What we can see here is the same setup, right? Here we already have the TD sequential count. You know, it's going to trade a little bit differently. So we already have that in place. Today we're going to get the TD setup 9 count out here. So everything is really in place. So if I would pay attention to the U.S. dollar index chart, but if it continues to move higher, then the euro is going to make is likely to make an A to B equals CD to the downside, which would give us a price projection. I'm going to be close, probably not exact, but you can see now it's made the 1.272, but I could have used a different A point out here. But this just simply says your next test on this is probably about $1.04 if we don't see a reversal inside of the euro, which is a 54% weighting inside of the U.S. dollar index. Now, the second weighting, I think, is the yen at 13%, and then the pound at around 12%, or I might have those flipped, and if I do, my apologies. So if we take a look at the Japanese yen out here, the Japanese yen still trying to form a bottom, but trading lower today. That is what's putting the pressure inside of gold and inside of the 30-year Treasury. We know about that correlation. We're seeing this selling pressure on this. Now, what we're likely to see today as well, same set of patterns out here. We're likely to see a TD combo, 13 count, and we're likely to see a TD setup. So with regard to currency pairs, hey, we've got synergy amongst one set of indicators, that being Tom DeMark's count system out here. And now we just need to see how this plays out. Why? Because we're at a place where we're going to see a turn, or we're going to see an acceleration that says, hey, it's going to the next level. So I think that was Tom or Bill, I hope that was Tom. I hope that helps you out on those currency pairs and what it is that we see. Let me just scan here for any other emails that might have come in. You can send me an email as well, steve@tfnn.com. Of course, I prefer to hear you by voice. But no, I don't see anything else out there. Okay, so that takes care of the currency pairs. Let's go see what else it is that we can search for and look at inside of the markets out here. Let's look at some support levels, important support levels. If we look at the 30-year Treasury right now, yesterday it formed a hammer candle. Now, that hammer candle can be a bottom. This was coming at the end of a 1 to 1.27 or 1 to 1.618 A to B equals CD to the downside until that hammer candle fails, the low of which is, by the way, 153.10 out here. Until that fails, all price might be doing at this stage is just testing a level of support. Now, there's another secondary level of support, and that happens to be the 153.31 area. Now, the little indicator that's on the bottom of my screen was really more intended for gold as opposed to the Treasury bond, but really it works the same way. It's what's referred to as the choppiness index out here. Now, choppiness index or indicator was developed, I believe that was by E.W. Dreiss, if my memory serves me correctly out here. Not really a well-known indicator type guy, but a smart guy nonetheless, a math guy as well. And on this indicator, you're going to see 2 red horizontal lines at the bottom. The top one, and this is why I kind of really love the guy. I never met him or anything like that, but this is why when I started reading about his indicator and applying it to gold specifically, and it works elsewhere. it helps you to identify when a trend is coming to an end out here. Doesn't tell us what that trend is going to do next, just that there's really going to be a great pause. So considering we were just looking at the Japanese yen out here, which is a correlation to both the 30-year Treasury as well as gold, we can see that it's now trading below its lower threshold level, which is 0.382. I didn't get to the reason why I love this guy, because the top line is 0.618. Anybody that uses Fibonacci numbers is okay by me, with me, however I'm supposed to say that. And so in this case here, we can see that we've got a hammer candle that formed yesterday. We've dropped down, or the indicators dropped down below that 0.382 level. It's the next move up above that level that gives you that confirmation that the trend is over out here. But that's how I'm putting together, I guess, that combination of markets. If we take a look at Goldilocks, we're going to see the same thing out here. Let me do this. Let's get the December contract up here for gold, trading back $6. You're going to see that today it is just dropped below. It's reading right now is 38.01, so below the 38.2 out here. So gold as well, just chopping around out here, trying to form a bottom. The bummer here is that gold is trading below its TAS daily profile low of 1223.70. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 12, S&P's up about 10. Right now, NASDAQ Composite. If we go check in on some other tools out here, let me see what else do I have on this. Oh, let's take a look at this right here, this chart right here. This is the S&P 500 is in the top panel, and the bottom panel is the rate of change that we've seen. In this case here, I think I've got it set for. I'm not going to think. I'm going to tell you what I have it set for. Give me a moment, and I'll pull it up. We've got this. Stevie's got this rate of change set for 10 days. So this is a 10-day rate of change. Now, it's also a very cool indicator, especially when the markets are making short-term bottoms out here, because it can get into a stretched area. And you can see for the top. For when tops get forming, it starts to perk my interest when this indicator gets above 40 for whatever reason, and down below minus 35. Right now we're at minus 39.04. And it's not a perfect indicator. I haven't found the perfect indicator out here, but we're just simply at a stretched position inside of the markets. You didn't need me to tell you that. I think really the better tool that you and I are going to use today is continuing to watch that 30-minute chart in the VIX index and see if we continue to get slightly, higher lows out there, and the actual end-of-day candle formation inside of the VIX. So, I'm going to be with you from 3 to 4 today. So you probably won't even need to remind me as we come into that 4 o'clock close, because Tom can't be here. So we will take a look at, I think the show ends at about 2 to 4, 3 to 4, something like that. So we'll have a really good indication by then as to whether or not we've got a hammer candle and something for you to go ahead and pay attention to. Okay, what else can we look at out here? I'm just flipping through some charts. Here's the ES Mini. Here's a 30-minute chart. Here's the horizontal trading ranges. 2183 is a significant level of resistance. We're at 2184 right now. If it fails to break above this area, then we can take a look at a move into either the midpoint or all the way back to 2155. The midpoint is probably about 2170 out there. If, in fact, price is able to break above this, then the next leg up inside of the ES Mini will take us up to about 2190, somewhere around there, with the eventual move up to about 2210. I don't think that is going to happen on this trip here just yet. If we take a look at the futures indices out here, you can see that the ES Mini also up against another significant level of resistance. That's its weekly TAS profile high. That is priced at 2184.25. We're trading at 2184.25, basically. So if the ES Mini is able to clear this, close above this level, not by a point, but close above this level, that would get you into super bullish territory. Now, the chart here on the bottom left, we're going to go ahead and explode this up, and I mean that in a nice way. As we take a look at it, is the Dow Equity Futures Contract, the daily chart out here. Now, this is a beautiful thing. Let me just make sure. Well, I'm not going to make sure. You can see there's either new profile that has formed or is trying to form, with 18,918 being the top of the box resistance. The center of the box is slightly closer to the top of the box, 18,768, giving a slight edge in this box area, this trading range, this fair value area, which is the bottom of which is 18,618. It may be at that 18,618 because Stevie has been looking for this pullback inside of the Dow. It gave us that signal after the explosive moves on November the 10th. November the 10th, there was a signal that, okay, we're hitting this pause button here. And although it's moved slightly higher, it hasn't done a whole heck of a lot out here. Of course, a little bit of a resting zone. It's also trading at the 1.2728 expansion of the last set of swing points. But with the new profile now forming inside the Dow Equity Futures contract, I now have a secondary area to be paying attention to for this pullback that I am anticipating occurring out here, which is going to be the 18,618 level. You may say, well, why are you looking at that? I shared with you, I think I shared with you. I know I can. Where is it? Where is it? Where did I put that little? Here we go. If we take a look at this chart right here, this is a chart here. Top portion is S&P, center portion is the Dow. The Russell 2000 is one below that. Now, what I'm anticipating is that price should pull back to my red line.
Now, actually, this probably is even lining up here with the equity futures contracts now they look at. So the pullback, Steve, is there a downside target on your yen trade on the daily or weekly? Danny, we'll go take a look at that for you. With regard to the, I'm hoping that the downside target right now is really because of those Tom DeMark counts out here, that we're really inside that zone. The target is really right now. But if it exceeds that, I think that's maybe your question. We'll try to take a look at this. But the anticipation here, just like the ketchup bottle, just like what's her name out there? What's her name? Carly Simon, is that it? Yeah. It gets that slow. It's been that slow out here, almost like molasses type ketchup out here. But pull back into this 2148 area now inside the S&P, 18633 inside of the Dow, and 1256 inside of the Russell 2000. These numbers will change day to day depending on what the market actually does out there. But those are the numbers that I'm looking to see a pullback to, and then the next leg to the upside should begin. But it is nice, for me, it's nice to also have as a secondary element. What did I do with that other chart? That's weird. I know, it's right over here. With a secondary element being a brand new market profile that's out there. So that was the Dow daily out here. Okay, let's go answer that question with regard to the, Steve, is there a downside target on the yen on the daily or weekly? So let's go take a look at it. So that's looking at the futures contract out here. So let's go take a look at it. We're going to look at the December futures contract. And so the next target area becomes 90. Well, I need to get more decimal, but it looks like about 0.9026, right around that area, 0.9027, 0.9028, right around there. That would be your 1 to 1.618. A to B equals CD to the downside. Below that, downside targets end up being about 0.8826, somewhere around there. And A to B equals CD, nomenclature out here, we would be saying that is your target because of the explosive move that this had off of that C point out here. Because if you take a look at the power of that move along the C to D leg, major compared to the angular move from the A point, which I'm using right now, September 27th, and the B point being October 28th. So, Danny, I hope that answers your question. If not, post another question, and I'll make sure that I answer it. Or give you the information that you are looking for out there. Okay, what else should we look at? So we've taken a look at the metals, the currencies, the treasury, the market itself. Light sweet crude, we can go take a look at light sweet crude. For those of you that are crude lovers out here, you've got light sweet crude trading at 45.78. What do we know about light sweet crude? Well, we know a couple of things. Number one, it's made the 0.382 retracement of its last leg from high to low. That's number one. Number two, it's trading above its TAS daily profile. That's short-term bullish. Daily profile high of 45.52. It's actually broken a trend line. Everything suggests light sweet crude is headed to 48.39. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Have a request to go take a look at IBM, so let's go do that out here. Give me a moment. I was just trying to pull something up on my other chart for you. So we're going to look at IBM and utilize a couple of different tools out here. So here's what we know. Recently, we saw a nice spike up in IBM with volume. So that's wide price spread, accelerated volume. That was with 7.7 million shares back on the trading day of November 10th. We can also see on that trading session that price had closed above its TAS weekly profile high. That is bullish. A couple days later, there was a brand new daily profile that formed out here. And that daily profile, that center of the box, closer to the bottom of the box, this suggests to us, from a profile standpoint, with regard to who's winning the battle here, that price is more likely than not going to go hit the 161.86 area. Now, if it closes below 158.01, then price will come back and test that breakout area. That breakout area would be the high of the trading session from November the 9th. That's 155.56 out here. Also at 156, if we go ahead and we take a look at Stevie's other charting tools, we can see that my red line and we can see where that pause point took place out here. As soon as we get to that pause point, the same type of pause point that you and I are looking at inside the S&P, inside of the Dow, inside of the Russell 2000 out here, just like with IBM, this tool works the same way all the time. If we take a look at this says that what IBM is waiting for is to test that red line. All right, so it's got to not right, but I'm suggesting right. But that's what it wants to do. Now the question is it going to do that by just sitting idle and let that oscillator and change line move up to it? Could be. Is it going to do it in combination with price pulling back and the oscillator and change line moving up? Could be out there. So it's any combination, but that's what you would like to be watching for with this tool out here. That's what its next move. So if you're long, there's no signals out here to do anything different than to stay long, other than expect a test of support out here, which we, in essence, really haven't received. Now, the support that it has tested has been the top of that weekly box. And again, that price level is 158.01. If it tests that and it then starts to accelerate and move higher and can do it with volume exceeding 5 million shares, that's the volume from November 14th, then you'll have an A to B equals CD to the upside. That's the daily. Just for the heck of it, Let's look at the weekly chart. See what the weekly chart here for IBM shows. Let's go ahead and turn those profiles off. Let's get rid of some clutter out here. Now, the B point of this A to B equals CD had volume here on a weekly basis of 22 million shares and was passed with 18. That didn't work. That didn't work. Passed with 15. That didn't work. Last week, 25 million shares. So you now have a confirmed A to B equals CD up inside on a on the lightning bolt. This is what the weekly chart projects for you. Your A point is all the way down in February 8th, the week that began 2016. Your B point is going to be the trading session from the week that began June 20th, as well as a C point June 27th. That gives you a price projection of 181.08. Now, that makes a lot of sense to you, right? Why does it make sense? Because that's where we have price at, in essence, that is where our gap down took place. If we take a look at where the real resistance zone ought to be inside of IBM, this is a weekly chart we're looking at. And on the weekly that began October 20th, we saw volume move to the downside of 69 million shares. So IBM is just trying to get back to an area where it had broken down from. And that's going to be the 178.69 to 181.08. That is what the longer term chart looks like for Watson. Not Tom Watson. Well, it actually is Tom Watson. But the stock IBM. Okay, what do we want to look at next out here? You know, I posted something earlier. That was for some folks that were in the den. I should really share that with you. Let me do this out here. This is probably something that most are not familiar with. Because the question was, hey, why did the Russell 2000, right? You guys in the den or gals in the den know what I'm talking about. Why did the Russell 2000 take off like it did? Like a bat out of, out of a box waiting for dusk out there. Have you ever seen the bats? Have you ever gone up to, they have these not batting cages, but I guess they're kind of bat cages up at University of Florida. For those of you that are University of Florida graduates, you probably know better than I do. But it's a really cool place. There are thousands of these bats that they've built these bat houses for, right? Townhomes, no less. And everybody kind of gathers around. You wait for dusk to set in as it continues to get darker. All of a sudden, they do take out. That's where the bat out of hell came from. Not that the University of Florida is hell, not that they build. These are nice townhomes that you and I would probably enjoy sitting there or living there. But that's just a UF thing. But truly, these bats, they just are cruising, and it's actually one of the coolest things to see. Now, of course, there are some prey that are familiar with that townhome area. So that is also kind of a lot of fun to watch. In any event, that's not where I was going with that. Where I was going with that was this spreadsheet here. Now, this is as of yesterday. And what most folks didn't realize, that could be even you, there's 1,968 equities that make up the Russell 2000. Yeah, I know. It says Russell 2000, but it's not really 2000. No, the NDX 100 isn't really 100. It's more like 108, 109. The New York, the Wilshire 5,000. And there's a big misnomer. Not even close to 5,000. It was at one point in time when it was developed, but it's not even close to 5,000 equity positions in there. Well, in the Russell 2000, the makeup, if I were to ask you, what do you believe is the number one weighted sector inside of the Russell 2000? And you would not guess. Well, you could guess. I'm kind of giving you the clues, right? If I said, what else was moving after the election process? What else took off like a bat out of hell to the upside? Yes, you're exactly right. Financials. So it won't surprise you to know that from a weighting structure standpoint inside the Russell 2000, that is the number one weighted sector. Financials represents 19+% inside there. The second weighted structure, just to understand why did the Russell 2000 take off like it did? The second weighted structure was industrials. Wasn't it really industrials that were also taking off at the same time? That is why the Russell 2000 was able to make up all that ground that was out there. Now, that's a good thing to know, because if it is true, if the Trump Meister is going to do what he says he's going to do, which is build, 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 and if the Federal Reserve is going to do what they say they're going to do, which is start to hike interest rates, that should be good for what? That should be good for financials. That should be good for industrials. You can kind of see where I'm going with this theme as to where it is we should be parked for this next large, gargantuan, huge move to the upside. That doesn't take us into just December, January of this year. It takes us higher for a much longer period of time. And somebody asked about energy. Hey, where's energy fit inside of the Russell 2000? At the bottom. At the bottom, well, not the very bottom. Close to the bottom. Telecommunications is the bottom, and energy is sitting right next to it. Yeah, it is financials, and it is the industrials that make up the two, and information technology as well, that make up the three largest weightings inside of the Russell. We'll call it the Russell 1968. We'll do that for the Detroit Tigers. For guys like Mickey Lolich, Norm Cash, all those guys. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So, I have been anticipating, giving you all the reasons why, anticipating a sideways move, pull back, nothing really majorly significant, key test of Stevie's red line. What if I'm wrong? What if the markets really aren't pausing here and want to continue higher? Then what am I looking for that next short-term top to form? And I would then have to go down and take a look at the New York Stock Exchange. And at the New York Stock Exchange level we'd be looking for, that's what we're looking at right now on my screen, I'd be looking for that advanced decline oscillator reading to get up to the plus 150 level. We are at 101. 101.49. Even though there's really kind of been some sideways movement inside the New York Stock Exchange, let me try to blow this up just a tad for you. There we go. If we take a look at the closing price out here on the trading day of November 15th, you can see we're pretty much trading right on that. But I want you to see that we actually have a higher closing high in our net advanced decline oscillator reading out here. And that's a positive. It's not a negative. There's not a diverging pattern out here. We're not making higher highs while our oscillator reading is making lower highs out here. So that would be the next area I'd be looking for. So if prices break above, for example, the ES above its weekly TAS profile, that says, okay, the next possible top would occur if price gets that plus 150 level. Now, if the New York Stock Exchange just simply cruises through plus 150, that is a sign of higher prices to come as well. So right now, nothing diverging there for us to pay attention to. If we go back to the beginning of the charts that we took a look at, I don't see any emails. I don't see any requests inside the Tiger's Den. So if we take a look at the beginning chart we had, new page, I think, we can still see until it takes out the low of today, again, a 30-minute basis, we still have what looks like a rising. This is a signal. This is an important signal out here. Otherwise, I wouldn't share it because you're not interested in unimportant signals out here. But, it'll be an end of the day thing. The cool thing is you and I will reconvene in an hour and 16 minutes or so, give or take, and we'll be able to check up on this, most importantly, as we come to the 4 o'clock time frame out there. What else is there to look in the at these charts out here? Gold's getting smoked a bit. We know, again, until the yen forms a bottom. So in the currency world, tomorrow and the next day are going to be really telling days for us because of the signals that are coming together inside of that U.S. dollar index out here. Let's take a look at a couple individual stocks. Let's look at AutoZone. Let's go see what's going on with AutoZone out here. Really just trading somewhat sideways-ish. Looks like it has broken a very short-term trend line out here. So it has. What does that suggest? Let's go see what our market profiles let us in on. Market profiles are saying price is going to run into resistance here in the not too distant future, meaning maybe it already did. The top of the box, 769.95. The actual high, 768.57. So a break above, a close above 769.95. 769.95. I'll get it out. And then AutoZone heads all the way back up to the upper zone, which is its high from August in 2016. That's the week of this is a weekly chart, by the way, that we're taking a look at. That is where it would head to, which is in the 817 type level. So, folks, it is a terrific Thursday. You know what that means. It's a great lineup for you here at TFNN. If we take a look at what's coming up, you've got our favorite polar bear. That's David White. There is no better polar bear on the planet. And then after that, well, it's the Tom O'Brien Show from 3 to 5. I'll do hour 1. I'm not sure who's doing hour 2, but we do have Andy Heck, and he's going to take us on home. So have a great day, folks. I'll see you in about an hour. Oh, Basil will do hour number 2. So have a nice Thursday if I don't see you, in an hour. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.